Yeah, FABA for advisors by advisors. Hosted by Evan J. Mayer, where the real ones talk business, no filters, no favors. How they structure, they practice, how they build their team. Independent route or employee machine. Talk platforms, payouts, culture and growth. What really works when you out there on the road? No can lines, just advisors being straight. Real conversations from the people who relate. Double podcast for advisors by advisors.
This is For Advisors by Advisors. I'm your host, Evan J. Mayer, and today we have a very, very special guest in Miss Molly Bennard. How are you, Molly?
I'm great.
Excellent. Molly is the CEO of Shook Research, recent promotion from president of Shook Research. Prior to that, she was the CEO of Connectus Wealth Advisors, an RIA, and also president of international operations for Focus as well. So she has a very rich history. Worked for Morgan Stanley, AXA, some other awesome places, and now she brings her talents to Shook. Welcome to the show.
Thank you. Glad to be here.
Tell us a little bit about your history, kind of how you got involved in the business a little bit, and then what landed you to become president of Shook and then eventually CEO of Shook.
Yeah. So I like to call myself a little bit of a jack of all trades. I started my career in the accounting world and spent a lot of time in the financial services sector covering various financial services companies, including asset managers and broker-dealers, and then ultimately wealth managers. I think my introduction to the wealth management universe really came through my involvement when I worked at AXA US, which is now called the Equitable. But many advisors know them through AXA Advisors.
Were you there during the merger?
I was there later. I was there, in the 2014 to 15 period.
Sure.
I worked as the head of strategy. So I spent a lot of time with AXA Advisors working on their distribution strategy from a global perspective and really started to learn about the wealth management industry in the United States. And it was pretty fascinating to me about the challenges and the growth opportunities that existed at the same time, as well as a transition to more holistic advice from the legacy, product-driven, transactional universe that we lived in.
Sure.
And then ultimately found a job with Focus. And I was with Focus for over 10 years and had a wide variety of roles there, everything from business development to M&A execution to integrating, firms together to advising the businesses that we acquired on practice management and growth strategy, and then building a business in Australia for Focus, and then finally building a RIA from scratch, which was Connectus Wealth Advisors. So pretty interesting. And
Focus is huge, right?
Yeah,
Focus
is a few $100 billion in assets.
Sure.
They've gone through a pretty aggressive integration strategy of all their subsidiaries. So I was there for part of that before I transitioned out of Focus last year.
Okay.
So pretty, interesting experience.
Was that hard to leave, being there so long, watching it build the way you did?
Yeah, I mean, the business took a lot of twists and turns over the years. From when I joined, we were a tiny company. I think we had like $300 million in revenue. And then by the time Focus went public and then we went private, and by the time we went private, I think we were like $3 billion in revenue, right?
Wow.
So,
yeah.
So it was a pretty cool place to be, and working closely with the founders of the business. And so it was hard because the relationships you build, not just with your colleagues, but with all the firms that you work with,
Sure.
and the advisors and the principals, and particularly my, the Connectus business and the international businesses that I was so involved in. You build, a personal relationship with all of them. But the cool part is that being part of Shook, I still can engage with them and work with them in a different way.
Oh, 100%. 100%. Yeah. And your background is of a CFA and a CPA. So you're very analytically driven, but you took a leadership role, which is a completely different, thought
Yes.
process and letting other people be overly analytical. Did you find that change to be difficult?
Not really. I've had some practice.
Yep.
I've from my experience at AXA working in strategy, and then obviously building Connectus and working at Focus with our partners. I had a lot of practice at moving away from the analytical, data-driven aspect of the role to more of the management strategy, visionary, innovative approach to building a business. The reality is the opportunity with Shook when it came to me was super unique because it's a firm that obviously the core of what we do is is research and ranking advisors.
Yeah.
But we have a super interesting and engaging business model where, of course, the core of what we do and what we always will do is the research and the rankings. But we also have 12 plus events a year, and we've built a community around that. And there's a lot of new initiatives coming from that around how we can support advisors, be seen as an industry thought leader.
Yeah, can you talk about the connection with Forbes and Shook? Like,
Yeah.
where did that, when did that start? And like, you guys have expanded. Like, when we looked at rankings earlier in my career, Forbes would do these rankings, but Shook wasn't around, or we didn't know about it.
Right.
And then Shook somewhere showed up, and then it became its own kind of beast. Can you talk a little bit about that connection?
Yeah. So Forbes and Shook Research partnered in around 2015. I wasn't around at that time, of course, but the history of that relationship dates back to around 2015, 2016 time period, which is pretty much when Shook was founded. Reality is, I think from a public perspective, people didn't realize that Shook and Forbes were partners as it pertains to the advisor rankings, but they've always been. It just was likely an awareness in the market of the existence of the Shook research process. I think it's important to note that Shook and Forbes have two distinct roles. Shook Research does all of the due diligence. We own the methodology. We perform the ranking.
Do you think that Forbes doing it on their own prior to Shook showing up, or were they not doing rankings?
I don't think they were doing advisor rankings.
Okay.
I don't believe
It was only Barron's probably at that.
Yes,
at that point.
and to note, Barron's in many ways was the legacy to Shook, as RJ Shook founded the legacy Barron's business and sold that to Barron's.
Oh, very interesting.
Yes, so Barron's was Shook's founded business. It was many years ago.
Got it. So that's why Forbes was like, hey, let's get into bed with the guy that started this.
Yeah, pretty much. And reality is Forbes has a lot of rankings, right? So obviously wealth management is one of their core rankings and accolades in their business, but they rank doctors, hospitals, lawyers.
You guys specifically stick to financial services?
Right. We only rank financial services advisors, teams, and companies, but specifically it's wealth management. So individual advisors, teams, women, next generation. We rank RIAs, and we also rank what we call financial securities professionals, which are insurance advisors.
Got it.
So those are the rankings we do as of the current. What I would say is stay tuned over time. We may add a couple additional rankings that are in the financial services or professional services space, but very ancillary to the wealth management.
What areas are you considering?
Well, we've looked at an expansion in our existing type of rankings, particularly around our teams. One of the things we've realized is that the industry continues to evolve, and we want to make sure that our rankings evolve alongside with it. So, the RIA space is a perfect example where, back in the day it was just RIAs only, but now what we see is there's a lot of aggregators, right? And they take all different types of forms, where a team could effectively hang a shingle from an RIA and be their own business.
Sure.
And so we want to make sure that we're classifying the independent teams versus the employee model teams, and the business model of affiliation with a wealth management organization like a Raymond James or a Sanctuary or whatever it may be has really evolved a lot, and there's quite a few models out there. I
agree. And I think it's good that you guys segue, because even when I go in there, sometimes I'm like, should I answer this as a Ray J advisor or should I answer this independent?
Yes.
And we think independent, right, as independent advisors. So we automatically want to go that route, even though I know for a fact, because I speak to a lot of the heads of RIAs, that they don't look at us as independent. They're like, well, you think you're independent, but we're truly independent,
That's always a debate, right? But so to that point, we're basically working through our rankings to make sure that as we rank advisors and, expand, basically the suite of rankings, that it really reflects where the industry is going.
Sure.
And that we're capturing the right data and information from those advisors so we can get our ranking methodology appropriate for that model that they sit in. So that's like one example. Other things we're looking at, listen, accountants is something we've discussed, estate attorneys, those are some ideas that we've kicked around internally.
Sure.
Can't promise we're rolling out those rankings anytime, imminently, but there's certainly areas that we would, be open to considering and thinking about.
Awesome. I kind of skipped over this, but I'm very interested. When did you become president, and when did you become CEO? And did you feel a big change in your roles when that happened? And I think we spoke earlier. You took a little time off before deciding on your next
Yeah.
step. What made this opportunity exciting for you?
Yeah. Um, let's start with the entry into Shook. So I did take some time off between when I left Focus last year. I wasn't sure what I wanted to do, to be honest. I love wealth management and I knew I wanted to stay in the industry, but I was trying to figure out, do I want to build a new wealth management firm? Do I want to run a business? Do I want advisors reporting to me? Do I want to be part of a larger organization? Do I want to be a consultant and work with advisors to help them enhance what they do? And
Which, by the way, you see a lot of people that leave those kind of roles you were in,
totally.
and they loved, like, the consultant role just for whatever reason feeds into their entrepreneurial mindset.
Yes. Yeah. And I was thinking about that. But this opportunity came to me. And the more I learned about it, the more excited I was about my ability to implement change and make a difference in the industry. And I think that's really what attracted me to the role at Shook was our mission of what we're trying to do, which is basically elevate the top advisors in the industry so that clients can find them and clients understand what quality advice is. And that's something, as I reference back to my earlier experience at AXA, it's something I realized all the way back then is how difficult it is to find a good advisor. And the mission of Shook is completely there, and there's still work to do in our industry. I hear it every day from friends and colleagues. How do I find a good advisor? Do you know? So it's still, the industry is still at that phase where clients, the end client and consumer, doesn't really understand what defines good advice or excellent advice. And so that really attracted me to the role. And of course, it's down here in Florida. So I live in South Florida, and that's where, the job is. So I was excited to not have to
Leave?
work
Yeah.
remote.
Who wants to leave Florida?
Exactly.
Yeah.
I mean, especially in the heat right now. Right now, just kidding. But the winter time is a great place to be here. But so that was another component. And then importantly, the ability to, exercise the muscle that I built over, the last 20 plus years of my career.
Sure.
We're a research organization, very data driven. We're performing due diligence on advisors, links back to my early, that data driven analytical aspect of my career. But effectively, I'm running a business that, the goal is to grow and expand, which is the operational aspect. So it was a cool way to bring my skill sets together
Sure.
with a purpose that was really important to me. So when I found out about it and met, RJ, Liz, and the rest of the team, got super excited.
So you're working under RJ for a little while, and then you now become CEO. Um what changes do you want to make now that you're CEO? My guess is that when you're president and you're coming in, especially with the founder of the company, you don't want to step on toes. Now, you guys did, private equity came into space there a little bit, so maybe that connection had something to do with it. But, bottom line is you come in as president, now you're CEO. Are you like, oh, I definitely see 3 or 4 or 5 things I want to change immediately?
Yeah. Well, I'm the type of person that I'm always coming up with new ideas. So I feel like our team is they want me to come up with less ideas because I have a long list of things for us to do. But
Sure.
to narrow it down to a few specific things that we're working on just at the current time. Um, One of our goals is to enhance the experience for the advisors that we work with.
Sure.
And so that includes a few components. That includes their experience when they apply through our survey process. That includes our ability to capture and share the data that we're receiving, the insights from the data we're receiving, not sharing the data
By the way,
specifically.
I just want to throw out there, I do love you guys started to keep last year's data in there so that as you're answering those questions,
Yes.
you have your baseline to kind of go off of.
Yes.
Now, obviously, we go through our numbers and we make sure all our numbers are
Sure.
legit, but at the same time, like, that was just a nice thing to add because you could just swap it in there and then just change that number. So
Totally.
it made life a lot easier.
Totally. So one thing is our survey design. Another piece is the data that we're gathering and our ability to offer more insights and benchmarking and knowledge around best practices. So that is a big initiative that's going on behind the scenes, and all the advisors who are in our community in the next year or so will see changes to our survey design, our survey process, and also all of the insights we share. another aspect is our events. Now, our advisors love our events, particularly our national events, but we want to make those events even better by looking at making sure that all of our content that we go through in the events are related to what the advisors want to hear, right? So getting more feedback from the advisors and really customizing each of those events to what the attendees want from us. So again, elevating that experience. And then obviously sharing the insights that we have from the research that we're doing. Um, we also have an initiative around, I mentioned earlier, around our rankings and expanding that. This year we're going to have, or not this year, next year, 2027,
Sure.
we'll have our first RIA event. So we're super excited about that. Our ranking comes out later this year. And so we've really ramped up the participation of RIAs in the industry, as well as the data capture and the insights that we can share. So again, this is in line with our goal to continue expanding what we do and having more to share. And then importantly, we want to be more active in the wealth management community in sharing, what we're seeing as a thought leader. And so, talking to you today is part of that effort to communicate what we're doing and encourage more advisors to be part of the community
Sure.
and apply. Because
Just make us a promise, though,
Yes.
us non-RIA advisors that don't want to go RIA.
Right.
And I've already looked at doing that, by the way, for the record. But, the world is changing very quickly.
It is.
And the RIA space is enhancing dramatically, a lot due to private equity and other things that are coming in
Right.
there to create that. There's still a lot of good advisors that are in the bank channel, that are in the wirehouse, that are in the independent
100%.
side. Don't lose faith. Don't lose
100%.
focus
And you know
on
what I'll
us.
say is the RIA world is about a third of the wealth management ecosystem, right? And so very important to us is to cover the full ecosystem,
Sure.
which links back to my point around evolving our rankings. We really want to make sure that we have participation across that full spectrum. So everything from the wires to the broker dealers to, the various affiliation models that sit in the middle to RIA, we want to make sure that we are covering that ecosystem. The other interesting thing that we're seeing in wealth right now is I like to call it like the convergence of models,
Mhm.
right? And it's fascinating. And this, from the more employee models, Raymond James is a perfect example where there's so many different options that you can participate in,
Sure.
from, the employee model to the independent contractor. And then there's some other,
The custody side, yeah.
there's some other options, right? To the RIA side where they're doing the same thing, right? So there is a convergence that we're seeing across the channels, and it's super interesting to see the industry evolve in such a way. So do not worry, we are fully focused on all advisors, but it's part of our strategies to make sure we cover them all, versus just one segment or two. We want to make sure that we are highlighting all quality advisors, no matter what channel they sit in.
And also, just one other thing to throw out there, just because I interviewed the CEO of Future Proof, which is
Oh, cool.
a great event. Matt did great on the show, and it's such a phenomenal event. I
It
think there's a
is.
lot of things that companies such as yours that are promoting advisor conferences go, hey, we can think outside the box. It
Totally.
doesn't just have to be cookie cutter where we drop the temperature to 50 degrees and we shove you into a room.
Yes,
Yeah.
agreed. And for our large conferences, we're thinking about ways to enhance that experience. Going back to my point before, so those are a couple things we're working on. I mean, we have a long list of ideas. I think there's no shortage of ideas across our management team
Sure.
on ways that we can make the advisor experience better and ways that we can contribute to the industry. And that's really our goal. And that's what we're here for.
So let's talk about an area that you probably get some criticism for and you don't know you get criticism for, which is, and I've heard people on LinkedIn say that, Shook Research and Forbes, it's a pay for play.
Mhm.
And, if you pay, you'll get your listed as a top ranking, but you're not necessarily any better than anybody else. You just pay for that
Yeah.
service. Let's talk a little bit about that.
Yeah.
Do people pay for play with you guys?
No, absolutely not. So very important to note a few things. Firstly, there is no cost to apply to be evaluated, and there is no cost to be ranked by Shook Research. And obviously, it's distributed by Forbes, and I'll talk a little bit about that in a moment. There is zero cost to the advisor. So that's why we always encourage the advisor or the team or the firm to apply, right? Because it doesn't cost anything. And if you get ranked, You can it'll be published on
Yeah, for the record, I'm
Forbes.com.
ranked. I've never paid $1 to them.
Exactly, right? So that,
Yeah.
you have the experience.
Yes.
Um, Now, I think where the confusion or the misperception comes in is, like all awards businesses, if you are ranked or receive an award, usually after you get that award, you have the opportunity to market it, right? And this is consistent with the industry,
Sure.
and there's SEC rules and around how the appropriate way to market that award if you are going to take that accolade and market it or advertise it to your clients.
Sure.
So for those types of things, there is a fee. But to be clear, that fee has nothing to do with the ranking process. And I can state with confidence, I've been deep in the weeds on our research and ranking process.
Does it change is there any, hey, they paid already, so we can re-rank them
Right.
again?
It does not.
Okay.
So our ranking methodology does not take into account whether the advisor has purchased a plaque or a badge or a profile page on Forbes.com. It doesn't take into account whether they attended or paid to attend an event. Or they attended an event. We do not take those factors into account. Of course, when we spend time with advisors in person, particularly at our events, we do use that knowledge in our due diligence process and our qualitative assessment, which we can talk about a little bit more. But we are not pay to play. There is no outside involvement in our ranking process at all. So, Forbes specifically is a marketing and distribution partner only. So Forbes is not involved in our ranking process. They're not involved in our methodology. They're not involved in our research or our due diligence.
Do they compensate you?
For
Is there a compensation from Forbes to you or you to Forbes?
Yeah, so our partnership, certainly we share in certain revenues that are generated. That is
Okay.
part of the partnership. They market our events and they market the
Which
list.
I think is fair.
Yeah,
Yeah.
and they share in some of the revenues that are earned, right?
Sure.
So that is the commercial relationship. The business relationship is purely a distribution and marketing relationship where Forbes distributes and markets our rankings, and we provide all of the due diligence. We own the methodology. We perform the ranking.
Did they have any say on who gets in or out?
No say at all.
Okay.
No say at all. We send the ranking, the list to them
And
we're done.
when you send that list, you verify like they haven't changed
100%.
that. Yeah.
Right.
Yeah. Awesome.
Exactly.
Talk a little bit about behind the scenes. Is this like just a computer algorithm? I didn't know initially, and then I want to say, 3 years ago they started to reach out a little bit more communicative with us. Like
Yes.
before, it was just submit, and you either got in or you didn't. And then like last year, we actually had I think I had 2 people from Shook, and one was like a wholesaler, and I kind of understood that relationship. The wholesaler might, there might be some compensation to get in front of top advisors, so why not? Can you talk a little bit about is it just a computer system? How, what's the human element involved in that, and then what transpires from there?
Yeah. Great question. Our research process is very robust, so there's a lot that goes on. There certainly is a mathematical exercise where we do take what we call our quantitative data, and those are things that may be publicly available or could be self-reported by the advisor or firm. We do verify the quantitative data to our best ability, which means going back to potentially the firm they work for and
Sure.
asking the firm to verify it. If it's obviously SEC reported, we verify it with the SEC. So we do have a verification process. So there's certainly a data component. But it's way more than just the data. Through our survey process, we, of course, gather information about the advisor, the team, everything from, growth to how they manage money, to their team structure, to their certifications and background. And all of that is taken into account. In every survey that's completed, every advisor that's considered to be ranked and is ranked will receive at a minimum, they receive a live phone conversation or an interview with us. So our team, which is based down here in Florida, reaches out to every advisor who's applied, and they have a conversation with them to verify the information in the survey, but also to ask them some more qualitative questions around how they work with clients, their purpose, their involvement in the community, how they work with their team, etc. We also, it's not every year, so an advisor won't see us every year, but we have a rotating schedule where we go out on the road. We perform about, at the current time, about 1,400 in-person interviews a year.
Okay.
So our team is out and about.
So it's not just because I happen to be in Boca. They
No, it's they're everywhere.
Okay.
At any given time, there's a member of our team out on the road.
Yeah.
And we work internally on scheduling all of those. And so it's a rotating schedule where we're out there meeting the advisors and teams and firms. And during those meetings, those are really where we dive into the softer side of being an advisor, which is actually the most important aspect, right? We learn about their how they leverage technology. We learn about their, from an investment perspective, how they're structured around governance and decision making, and from an what are they doing from an asset allocation. We'll never look at like performance or product selection. That's not part of our review process.
I'm actually just so glad you said that, because one of the I guess the fear topics that I have, and I'll speak up for the advisors that manage money a little similar to me. I don't use a lot of packaged products.
Right.
I like individual stocks and individual bonds and doing my own structured investments and so on. And so as those questions come up, I start going, are they asking that because they're going to have wholesalers call me, or they're going to, or they're going to sell the data? And again, look, there's a give and take to being ranked and getting that kind of publicity. And so I wouldn't be mad about that. But at the same time, I wouldn't want rankings to come out specifically because wholesalers or mutual fund companies or ETF companies are funding you more to get those advisors ranked. And I guess my conspiracy theory mind is going, like, I hope we're not going down that path.
No, and they don't. And we do not share any of that detailed information with any third parties. It is our proprietary information.
So that's very good to know.
Yeah, we may share insights. So for instance, in the next conference you go to, we may be sharing like, okay, across this ranking, right? It could be teams or individual advisors. Advisors across the ranking are, 30%, I'm throwing out, these are random numbers, but like 30% are, leveraging individual securities, and, 30% are using whatever SMAs, whatever it may be. So we may share some global statistics to give the advisors some perspective on what similar advisors as them are doing.
Yep.
But we would never share individual information with the third parties around what a specific advisor is doing. That is not in the realm of our business model, and it violates our, goal to be objective and independent and protect the advisors' details that they give to us.
Yeah, and I mean, we know as advisors, we get invited to a lot of conferences, and when you get invited to conferences, you go, okay, this mutual fund company sponsoring this is conference, they're going to get this, speak, and I get all that, and there is that. I think it's really refreshing to hear that from you, that it is not that way. I did want to just switch topics a tad bit and talk a little bit about private equity, because private equity is coming in. Now, you guys actually got bought by private equity in 2025. That's public knowledge. And one of the things I did is yesterday I Googled that company, and I said, I want to know if they own a bunch of RIAs or broker dealers, and would that methodology get compromised by who owns you now? And from what I saw, PPL is that
PPC.
PPC, excuse me,
PPC
is in multiple different areas that have nothing to do with you. They have a little bit in wealth management, but it wasn't like anything that could ever really affect the ranking models, which I think is a great thing. As we see private equity come into the fold and buy practices and RIAs and BDs, and some of these RIAs are now getting so big that you're actually wondering, like, hey, who can actually buy them when they're ready to exit anyway? Or is it the wirehouses and so on that are losing all those people that eventually the wirehouse ends up buying the private equity company? How do you see all this playing out? It's and I'm not to put you on the spot and spare you off against somebody else, but we had Tony from Advisor Hub, which is obviously a smaller publication, but definitely a publication that advisors read. And he skirted around it a little bit because I think, he's open to private equity. And I noticed some of his conferences had a lot of private equity backing coming into them.
Yeah.
So what are your thoughts around it?
Yeah, I mean, private equity certainly has flooded the wealth management space for good reason. I mean, wealth management firms are basically an annuity of cash flow with very high margins, and they're sticky. So, if you're an investor, it's a great opportunity to invest, and the risk is relatively low as long as you manage things like succession planning and so forth. So it is very attractive to the private equity space. I think specifically to Shook, and then I'll talk about the wealth management sector. Specifically to Shook, it is unique that a company like ours is owned by private equity. I think we present a really unique opportunity to PPC in that there aren't a lot of firms like ours. There's single digit, right, that
Sure.
have the level of due diligence and integrity that we do, and it's not just an data driven exercise where you take SEC data or self-reported data and just rank it by size and then you're good, right?
Sure.
We
Yep.
have a very distinct business model. And it's quite unique in the industry. So I think for PPC, it presented a unique value proposition in the professional services space, which is where they do invest. You're correct; they do not own or invest currently in any type of wealth management or client-facing wealth management firm, right? Where they might invest in like technology associated with it
Yeah, I
or
saw some
professional
institutional
services.
stuff, but
Yeah,
not what
nothing
we do.
related
Yeah.
to individual clients. So that is correct. So we're an investment in the wealth management space, but really from a professional services perspective, right? BPC has been a great partner to the business. They are a middle market investment firm, so they understand that we're a small business.
Sure.
They've been really supportive in the day to day in thinking through our strategy as well as investing in the business. And so myself joining was obviously part of that investment, but we've invested in a whole leadership team. We now have a CMO, a chief revenue officer. We've invested in our research function. We've added a handful of folks there. And so, and then we've also invested in our relationship management function. So, they've made a lot of investments there, but they've also invested in our technology and tools. And I mentioned earlier about enhancing the experience for advisors, of course,
Sure.
using technology tools, AI, to better equip us to do our research as well as our analytics has been super helpful. And they've brought in external resources as we need to support our growth. So they've been a really good partner to us. Private equity in the wealth management space. What I would say is not all private equity is created equal. I think that's really important for advisors or practices looking to sell to
Sure.
private equity. I've worked with a lot of private equity firms. They take different approaches to their investment. You have private equity where they're hands off and they make an investment in you, and it's basically they're there as a capital partner and they're there to help you if they can with introductions or maybe some like
Sure.
insights or practice management, but they're pretty much allowing the firm to operate status quo. And then you have other private equity who want full control and want to change the whole business model. So I think it's really important from a advisor perspective or principal perspective when you're looking at private equity as an option for monetization and succession planning for the business to really understand the firm you're talking to and how they're going to operate with you post-transaction.
What do you think about the ones that are, buying portions of your giving you a very small multiple, but then giving you access into private equity shares of their company that eventually will sell for a big multiple? We've seen a lot of them collecting. I haven't really seen a lot of sales happen.
Well, it's a newer and more novel iteration
Yeah.
of investment approach. So hard to say what the future will yield for that. But obviously the thesis is the same as what I explained earlier around the cash flow and the stickiness. And obviously minimize.
Oh, I get why they want to buy it.
Totally.
I guess my concern is advisors beware, because they're promised some huge multiple down the road. But again, as these private equity companies are now, some of them are in the 20, 30, $40 billion range.
Yes.
Who's going to buy them who can afford to buy them other than a big bank?
Yeah. Hard to say. So I think the verdict's out. I think you see how it evolves over time. It's unclear, where they end up. I don't have a strong opinion because there's so many different investment models out there
Sure.
at the current time for private equity investment and wealth management.
But you see what I'm seeing, where they're coming in mass droves.
Yes, definitely it's very attractive to the private equity sector. Honestly, over the last few years, there's so many names of aggregators and private equity backed businesses, you start to lose track of who's who because there's so many of them.
Yeah, or you like, oh wait, I know them. Wait, they're backed by the same people. Like
Yeah,
that.
that is an example that's happening.
Yeah, it's happening a lot. Awesome. Talk a little bit about elite advisors. If anybody knows elite advisors, you do. You worked with them, you managed them, and now you cover the ranking. What are top advisors doing today that are not just the stuff that they tell you on stage? What are they actually doing that is creating them to grow?
Yeah. I would say, undeniably, what we see with the top advisors is they make themselves irreplaceable. I'm not saying as an individual, but they make their relationship, their and their team's relationship with the client irreplaceable. So it's so difficult for the client to walk away because the client has built that relationship with them that's more than just money management, right? And so what I would say the top advisors are doing is they've moved into comprehensive services, right? So full suite of capabilities, not just portfolio management or as we call wealth management, but includes, tax, financial planning, estate planning, accounting, et cetera, et
Almost
cetera.
like family office feel
Yes,
offices.
exactly.
Yeah.
Um, I think important, top advisors see relationship as a system,
Yep.
right? It's not relying on one advisor, it's relying on a team and where you have team coverage and you surround the client. Now, of course, you have to be mindful of your segmentation, right?
Sure.
You have to look at your clients and determine what model is right for them.
Yep.
But they see it as a relationship system, not just an individual relationship, right?
Yeah.
I think top advisors know how to coach their clients. As we all know, clients, especially sometimes people who have a lot of money, make a lot of bad decisions,
Yep.
right? And they're very emotional about it. So top advisors have the behavioral knowledge of how to coach clients and help them avoid making bad decisions.
Which, by the way,
Financially
the
is
last 3 years has been easy for all financial advisors. So at some point, I know those younger advisors think this is just the way it is.
yeah.
It's not just this way.
Yeah, there's ups and downs
Yes.
for sure. And I think the last two things I would say top advisors are doing is one is they are aware and managing the intergenerational wealth transfer, both from the client perspective, like getting in front of the children, the wives, etc. Um, and then also from a team perspective, that they're hiring the right people to serve the next generation and can address that appropriately. And then I'd say the last thing, which is the softest thing, but really is purpose and values. Um, Top teams and top advisors have a really strong sense of purpose and
Sure.
why they're here, and what their job is to support their clients. And I think that really, when we look at our top ranked advisors, particularly in our teams as well as our top advisors, they all have that same underlying sense of purpose and values around the greater good that they're providing to their clients. And
I agree. They're almost defensive because I notice myself. I'm defensive of how great we can be for people, but I'm also knowledgeable that a lot of advisors are not that way and are not doing business the right way. And it's funny because I grew up in the bank channel, and I think we all start off with I want to make money, I want to help people, but I want to make money. And then you get to a point where the money's not the issue, and you're just like, I want to do the right thing, and I want to be
exactly,
defensive of the business we have.
exactly,
Yeah,
it's really a noble profession, and that's what many people don't realize. But for top advisors, the purpose is to help people, to help clients,
sure.
and help them reach their goals. It's not about hitting investments are important and returns are important to hit your long-term goals, but it's not about what the stock market or their portfolio delivered in the last quarter. It's around like how are they getting closer to their objectives and how are you helping them manage that
Well,
journey.
that's what I find funny. Like the Fisher Investments commercials are still so geared towards, but they're trying to show that they're financial planners, but they're not. Like
Yeah.
it's a pretty interesting dynamic. Let's talk about the future of Shook. We did talk a little bit about some of the different things you want to do with conferences and so on and so forth. Where do you see the company in 5-10 years from now? What are some new things we have not talked about that might be interesting
Yeah.
for the audience to hear?
Yeah. So we want to be seen in the industry as the where would a client go to find quality advice? Like we want to be seen as the standard for excellence in wealth management.
And you
That's
would
our
you would agree that's an area of weakness probably today. Like clients are probably not going to Forbes to look for their advisor. It helps, like we have plaques and we advertise it, and so it's out there,
It
and
helps
then
build your credibility.
it helps build credibility.
Yes.
But yeah, as of
But the next
today,
iteration of
yes,
that, right?
yep,
So right now we're helping advisors build credibility publicly and with their clients. But the next iteration is that, we basically are representing through our rankings what quality advisors are and what to look for, right? And that's where we want to be longer run. So that's kind of like the long-term vision of where we're going. How do we get there? There's a lot of baby steps to get to the big, the end of where we want to be. Um, right now we're doing an interesting project, with myself joining in our CMO, and the transition, of the business with PPC and so forth. We made the decision that it was a good time for us to refresh our brand and our look and feel, as well as our values. And so you'll be seeing more from us in the very near future around our website enhancement, but also about potential a shift in our branding and our brand name. And so that will be coming out soon. But I thought it would be helpful to read a couple things for you, because I
Sure.
think it's
Yeah.
super interesting to who we are.
You don't want to share the name on this podcast, right?
No.
Okay.
Stay tuned. Stay tuned. So I'm just going to read you kind of a short, little, mission statement and a couple components that really reflect who we are and where we're going.
You got it.
So we measure twice and publish once, because defining excellence demands precision. Shook's value lies in its proprietary methodology, our deep advisor relationships, and access to elite networks and independent authority in defining what excellence means for our industry. Our methodology is exhaustive, our independence resolute, and our network is unmatched. That's really who we are, and we want the public to understand that. And so, our new website and our positioning will really reflect that as who we are as a company.
It's not changing Forbes; it's just Shook.
Yes.
Yes.
Right.
Okay.
Exactly. Our relationship with Forbes is a long-term relationship, and we'll continue to
That's
market
staying
and
as is.
distribute the
Got it.
rankings. Yes, absolutely. And then last, I'm just going to review our 4 values that I think are important for advisors to see and hear.
Sure.
One is our rigor. Our methodology is really our moat at the current time, and it always will be. We are a research company at our core, right? We're mission-led, going back to the sense, not just for our advisors to have purpose and community involvement, but we exist to really elevate our industry. It's not just to rank it, but to that point. We want to elevate the client's ability to find a quality advisor, right? Yep. We're convening, our events. We bring advisors together. We're building a community, and that's really important to what we're doing. We're uncompromising in our independence. That goes back to the point around, you asked me earlier about pay to play and what, how we operate, which,
Sure.
We're not driven by, quantitative factors like AUM. Our rankings are based on, a holistic view of the advisor, and it's our independent view.
Of course.
And then last is we're human, right? We operate in this human industry of wealth management. Every advisor has a client, right? And we're in a people business. And I think that's important not to forget. It's not just about an algorithm shooting out a result. It's about building real relationships and understanding the results of those relationships from an advisor perspective and how they support their clients.
Yeah, and that last part's extremely important, because I don't care how great and big AI gets. And again, I'm using it more and more often. The best advisors out there are going to be the people that can use that to deepen the relationship they already have with existing clients.
Yeah.
And as long as AI doesn't replace humans altogether, I think our business will continue to exist. So
we agree.
Awesome. Well, Molly, it was phenomenal having you on. We learned a lot. We got some things covered that we us in the advisor community have not heard, and to hear directly from you was great. We wish you well and keeping the legacy going. And I think the idea and the concept of making Shook Research a example of where clients can find those top advisors and ways to connect only add extra value to what you're already doing. So thank you so much, and appreciated you being on the show.
Thank you.
FABA for advisors by advisors. Hosted by Evan J. Mayer, where the real ones talk business, no filters, no favors. How they structure, they practice, how they build their team. Independent route or employee machine. Talk platforms, payouts, culture and growth. What really works when you out there on the road? No canned lines, just advisors being straight. Real conversations from the people who relate. Double podcast for advisors by advisors.